Good day Forex trader. Your USD Forex signal, bullish breakout above $1.1400. Today's signals. Risk 0.75%. Trades must be taken before 5 p.m. London time today only. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1456 or $1.1514. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1394 or $1.1353. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote on Wednesday last week that we had a close fight between bulls and bears and it was hard to tell who is going to win over the medium term. I thought that the best potential trade would be along from $1.1261 or $1.1250. Although those levels were never quite reached, I was correct to see the best odds as on the long side, as has been proven by the slow rise over the past week leading to yesterday's breakout beyond the $1.1400 area. The Forex market is clearly dominated by weakness in the US dollar, which has been prevalent for some days, and was driven technically by a longer-term rejection of a key resistance level in the US dollar index. This weakness was confirmed yesterday by the increasing pace of US CPI, inflation, which has had the effect of sparking a further sell-off in the US dollar. Almost every currency has risen against the USD in recent hours and the euro is no exception despite its recent relative weakness as a currency, which can be clearly seen when you look at a chart of EUR/GBP for example. It looks like the odds are clearly with the bulls on the long side, but the US dollar index is sitting in a potentially supportive price zone now, and looking at the price chart below we can see the price has been held over recent hours by the resistance level at $1.1456. I am not convinced that we will see a break above this level today, but I think the best potential is still on the long side. Therefore, my ideal longer-term setup for this currency pair would be a retracement to the support level at $1.1394 with a bullish bounce there. In the meantime, a short scalp from a bearish rejection of $1.1456 is likely to be the best opportunity, but probably will need to be taken and managed on a short time frame. Gbp Usd Forex signal, sterling set for more gains. The pair will likely keep rising today as the bullish momentum continues. Bullish view. Buy the Gbp USD pair and set a take profit at 1.3800. Add a stop loss at 1.3600. Timeline, 1 day. Bearish view. Set a sell stop at 1.3650 and a take profit at 1.3550. Add a stop loss at 1.3750. The Gbp USD pair held steady on Thursday morning as investors reacted to the latest American consumer inflation data. The pair rose to a high of 1.3690, which was the highest level since November 3 last year. It has risen by over 4% above the lowest level in December. US inflation data. The Gbp USD jumped as the US dollar declined broadly. This performance was mostly because of the latest data by the American government. The data showed that the country's consumer prices continued rising in December as the Omicron continued to cause supply chain disruptions. The headline Consumer Price Index, CPI, rose from 6.8% in November to 7% in December. This increase was in line with what analysts were expecting. It was also the highest figure since 1982. On a month-on-month basis, inflation dropped from 0.8% to 0.5%. The core CPI, which excludes the volatile food and energy prices, rose from 4.9% in November to 5.5% in December. It rose slightly from 0.5% to 0.6% on a month-on-month basis. These numbers are significantly above the Federal Reserve's target of 2%. They also validate the fact that the rising inflation trend is no longer transitory. In theory, the GBP USD pair should have declined because of the rising inflation. Besides, the Federal Reserve Chair warned that the Fed will quicken the hiking cycle if inflation remains stubbornly high. Therefore, the pair jumped instead because there are some early signs that inflation has peaked. For example, data published on Wednesday showed that the Consumer and Producer Price Index in China declined sharply in December. This was a notable thing since China is one of the biggest American trading partners. Later today, the pair will react to the latest American Producer Price Index, PPI, data. Gbp Usd Forecast. The 4-hour chart shows that the GBP USD pair has been in a strong bullish trend in the past few weeks. The gains accelerated on Wednesday after the US published its inflation data. It moved above the upper side of the ascending channel that is shown in blue. The pair also rose above the 25-day and 50-day moving averages. The Relative Strength Index, RSI, managed to move above the overbought level. Therefore, the pair will likely keep rising today as the bullish momentum continues. This will likely see it rise to the key resistance level at 1.3800. AUD USD Forex signal, extremely bullish above 0.7280. The pair will likely keep rising as bulls target the key resistance at 0.7345, which is along the 61.8% retracement level. Bullish view. Buy the AUD USD and set a take profit at 0.7345. Add a stop loss at 0.7200. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7250 and a take profit at 0.7200. Add a stop loss at 0.7300. The AUD USD price jumped to a key resistance level as the US dollar sold off following the strong American inflation data. The pair is trading at 0.7275, which was the highest level since December 31. It has risen by over 2% above the lowest level this year. US dollar retreats. The AUD USD pair rose primarily because of the overall weakness of the US dollar. The greenback declined against most currencies like the euro, sterling, and the New Zealand dollar. The US dollar index, which tracks the US dollar against a basket of currencies, declined by more than 0.6% in the overnight session. The currency declined sharply after the US Bureau of Labor Statistics confirmed that inflation was still surging in the country. The headline CPI rose from 6.8% in November to 7% in December. This figure was in line with what analysts were expecting. It was also the smallest pace of increase in a few months. The core consumer inflation data jumped from 4.9% to 5.5% in December. Also, this increase was better than the median estimate of 5.4%. This figure excludes volatile food and energy products. Still, analysts believe that inflation has jumped at a faster pace than official numbers. For example, home prices in most American cities have jumped by over 18% year-on-year in the past few months. Similarly, rental prices have also jumped by double digits in the past few months. The same trend has happened in Australia, where the cost of most products has been in a strong bullish trend lately. The most recent data showed that the country's inflation rose by almost 5% in the third quarter. Later today, the AUD-USD pair will react to the latest U.S. Producer Price Index, PPI, data. Economists expect the data to show that prices rose by 9.8% in December. AUD-USD Forecast. The 4-hour chart shows that the AUD-USD pair made a bullish breakout on Wednesday after the latest inflation data. The pair is trading at 0.7278, where it struggled moving above in December. It has managed to move above the 25-day and 50-day moving averages. Also, the price is at the 50% Fibonacci retracement level. The Relative Strength Index, RSI, has moved above the overbought level. Therefore, the pair will likely keep rising as bulls target the key resistance at 0.7345, which is along the 61.8% retracement level.